Welcome back to Ferocious Education. This is Zed. Today we're going to be talking about Corsair, going with the ticker CRSR. Now, in hopes today, what I'm going to be doing is giving you a good amount of due diligence information to give you an idea about this company, followed by that with some institutional buyers and the technical analysis. So without further ado, let's jump right into this one. So this one here I haven't covered before, so hopefully I'm able to give you a good perspective into this one. So if you were just to know about them, they say that Corsair is a leading global provider and innovator of high performance gear for gamers and content creators. Our industry leading gaming gear helps digital athletes, from casual gamers to committed professionals, to perform at their peak across PC or console platforms. And our streaming gear enables creators to produce studio quality content to share with friends or to broadcast to millions of fans. We design and sell high performance gaming, streaming peripherals, components, and systems to enthusiasts globally. Corsair has served the market for over 2 decades, and many of our products maintain a #1 US market share position. We built a passionate base of loyal customers due to our brand authenticity and reputation as a provider of innovative and finely engineered products that deliver an uncompromising level of performance. So let's take a look into some of the news that they do have. So Elgato launches Stream Deck 5.0 app updates with new store features, plugins, music, sound effects, and iconic packs. Incredible sound, impeccable clarity. Corsair launches Virtuoso RGB wireless XT gaming headset. That was back in the 13th of May 2021. Custom cooled or custom styled, Corsair launches 5000D RGB Hydro X Edition and 5000X RGB Signature Series mid-tower cases. Corsair Gaming reports record first quarter 2021 financial results, and that's actually the one I'm interested in. And if we were to look into this one here, I'm actually going to pull it up from the SEC filing. Their net revenue was $529.4 million, an increase of 71.6% year over year. Gamer and creator peripheral segment net revenue was $175.9 million, which is an increase of 132% year over year. And gaming components and system segments net revenue was $354 million, an increase of 52% year over year. Gross profit was $160.3 million, an increase of 104%, with gross margin of 30.3%, an improvement of 480 basis point year over year. Gamer and creator peripheral segments gross profits was $68.9 million, an increase of 211.1 year over year. Gaming components and system segments gross profit was $91.50 million, an increase of 62% year over year. And operating income was $67.3 million, an increase of 404.5% year over year. And adjusted operating income was $80.4 million. That's an increase of 221.4% year over year. And a net income was actually positive, around $46.7 million, or around 47 cents per share, compared to a net income of $1.2 million in the same period last year, or around 1 cent per diluted shares. You get to see the difference. We're talking about 46 times or 45 times better net income than compared to last year. An adjusted net income was around $58.2 million, or 58 cents per share, an increase of 420% year over year, compared to $11.2 million in the same period, or around 13 cents per diluted share. Now, the adjusted EBITDA was $80.4 million. That's 197% year over year, an increase of around 640 basis points year over year. And the cash on hand they have is around $125.6 million, 48.1 million capacity under the revolving credit facility, and a total long-term debt of $294.3 million. And a cash flow operations was around $27.8 million, which increased $2 million in the same period last year. So hopefully that gives you a bit of information. Now, for the financial outlook, what you're seeing is the company is updating their guidance for the full year. They're raising their net revenue to be in the range of $1.9 billion to $2.1 billion. Previously, it was between $1.8 and $1.95 billion. They also raising the adjusted operating income to be in the range of $235 million to $255 million from 205 to $220 million. So there's a good increase from there. On the upside, almost $35 million. They're raising their EBITDA as well to a range of $245 to $265 million. That's higher from the $215 to $230 million range they previously given. So they're definitely doing better than expected. Now, if you were to go back and try to see some of their fundamentals that are really important for me when I'm looking at a lot of these companies, the current fundamentals in general, you're looking at a price over book of 6, which if you were to look into the price over book of the SP 500, that's currently around 449. And if you were to look into the price over sales, it's 148. The SP 500 price over sales is around 3. So it's definitely meeting the market around in price over book closely. Price over sales is highly undervalued. Now, if you were to look into the EPS last year and the increase of on how they're doing, fundamentally, they're amazing in that sense. Well, I rarely ever say that about a company, but this has been recommended on someone from our Discord multiple times. Arctic, I'm sure you can hear this, but nonetheless, it's definitely a good pick from my opinion. Now, moving on from there, we can start taking a look into institutional buyers, but before doing so, make sure to drop a like to this video to help this channel grow. Subscribe on the bottom right, and there's a bell notification button right here. Make sure to click that, and you can join our Discord and talk to one of this company's fan, Arctic, right on here, totally free. Now, moving on towards the institutional buyers, you get to see that generally speaking, they're bullish, not bearish, but there's not a lot of activities because a lot of these companies or a lot of these are just actual index funds rather than institutional buyers, which doesn't mean much in general. It's still bullish to see institutions or these index funds not removing their shares in. So as far as I'm concerned, it still looks okay on the institutional buyers. Let's move on now towards technical analysis. Now, from a technical analysis point of view, what you're starting to get to see on some of these technical indicators that they will try to be basically on the moving averages all touching each other, which is not a bad thing in that sense, but you don't have enough information on the chart for these indicators to work best. So I'm only going to highlight the ones I'm confident about. For instance, the William percent R, which is very similar to the RSI, shows that this one is oversold, which means if you were to maintain back that equilibrium, you would need more buyers back in. So in theory, it's kind of overdue for a little bit of a push backwards, especially from the 43 bucks all the way to around 32 bucks. MACD is attempting to go towards the negative side, which is suggesting more of an accumulation rather than a negative reversal. So accumulation is not bad. It's very similar to here. It gives time for people to kind of get in, etc. Basically, cooler heads would prevail in that situation where people start realizing what they're actually buying. Now, in terms of stochastic fast and stochastic slow, both are suggesting that this actually might be a good time to buy. And in terms of the moving averages and the Bollinger Bands, which both are really just volume momentum indicators, so I'm going to stick to the Bollinger Bands, you're expecting to trade this one, or this one to be traded at 35.36 on the top and 29.84 on the bottom. Although I really doubt that it does drop towards that bottom. And volume, we recorded a really nice volume on the 14th of June, but it's kind of been quiet since then and cooled down quite significantly. Now, the first thing I do want to take a look at is Fibonacci retracements. And the reason why I'm doing this is because high frequency traders and experienced traders sometimes use this, or often actually use this, and it becomes like a self-prophecy towards the supports and resistances on the Fibonacci retracements. So if we were to look into resistances on here, you're seeing 32.76 as a close resistance, 37.16 and 43.43. Current supports on the Fibonacci retracements are 28.36 and 22.92. Now, in terms of price line action, you're seeing a very strong support starting at 31.66. Below there, 31.12. Below there, you're looking into 29.77, 27.95, 26.42, 23.99, going down to 22.88, 19.90, and then down to 18.14. Significant resistances from what you're seeing, you're looking into 32.76 up to 34.34, and then going to 35.32, another strong one at 36.42. Above there, you're going to start getting turbulence all the way to 42.75 to 44.22, and then another strong resistance to 47.02, and then 50 or 48.30, going up to 49.64 and 51.37. Comes to the question to Ed, what do you think about this one? Well, I actually started to like the fundamentals about this one. They actually look like a solid company in general. Now, where the price point action is going to be, that's a little bit tough to tell with only around less than a year of information on the chart itself. But from what I'm seeing is that it's very hard for it to dip below the 29 bucks, and it really has a really nice upside in the next 2 years or 3 years, depending on how far they keep going. I do anticipate this one to double in value in the next 5 years. I know that might not sound as promising as you might want to hear, because other YouTubers and other people out there are saying short squeeze 1000% right now kind of situation, but I'm trying to be a bit more conservative on the price target to set expectations a little bit lower than a short squeeze right now, right there kind of thing, you know. But nonetheless, I do like this company. They're fundamentally sound. The price over book is not as important for me as the price over sales. That's really important for me because a lot of these companies out there really do well on price over book because they keep just shoving offerings down people's throat and their sales are not there. Here you're seeing a rare situation where their sales is actually really better than their own valuation on the price over book, and the price over book will catch on. So definitely I do see this one at least being double at the current market valuation. So that's not putting into mind that if the market itself crashes, everything drops down with it. But definitely nice pick, Arctic. And what do you think about this sticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day. Now, if you made it this far into the video, I do recommend that you go ahead and join our Discord server. There's a lot of amazing folks in here. We do a lot of discussions here into the trading floor throughout the day. A lot of people are in there, and we do ask questions. You can ask me any question you would like on there. We do post research and DDs, and we hold weekly chat sessions. And we also do have a lounge in there. So make sure to actually join that and join the fun there. Have a wonderful day and a good one.